We do have the Taiwanese index, which is up around 1.7%.
Index to focus on today is Nifty Financial Services. It's the Tuesday weekly options expiry on Nifty.
My sense is that Fed may continue rate hikes for some time.
The total aluminium production has jumped up by close to around 2%. The good part is the Jasukta facility out there, that's up by close to around 5%.
Nifty is opening 245 points higher.
A fair bit of interest rate highs that we've seen in the system, but concomitantly we've not really seen as much of inflation decline come along with it, especially as far as the developed markets are concerned.
This was our highest ever sale in a given month, so we are very happy with our performance. We have sold 47,100 tractors in the domestic market.
A muted second quarter update coming in for Marico itself. The India business posted a low single-digit volume growth. Remember, the previous quarter there was a negative growth.
If you look at the first 6 months of this fiscal, the industry has already grown more than 10% now. So even if you assume a flat industry in the balance of the year, you will still grow more than 5%.
Big relief is in trade deficit. After all, with the pressure on the rupee, you don't want to buy more dollars than you can earn. So that difference has fallen to 26.7 billion.
We have Nifty sitting with gains of 370 points.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. I'm Prashant Nair, and well, let me promise you, this is a bit of the old and a bit of the new Closing Bell. There is Anuj, of course, who's here. Anuj. I mean, I don't know, I feel weird introducing you to the show. But Anuj has hopped across from the next door studio from Awaaz. He's going to be with us with his invaluable insights. And our man in the... Reema is here, of course. Sorry, Reema.
Thank you for not forgetting me.
What do they say? Ghar ki murgi, right?
Dal barabar. I think day one at least should give me some, pow.
And Nigel is out there in the newsroom. He's our man in the newsroom. And, through him, we hope to kind of sort of, live in the newsroom buzz, the energy which he will bring across to all of you. Nigel, hi.
Well, hi Prashant, don't miss me too much. In case you are, it's a holiday tomorrow. You can take me for a drink. What do you think about that?
Well, absolutely. I have a better plan, which we will discuss off air.
All right.
Right now, there's clearly a big party taking place in the markets, right? And going by Dow futures, which is up 1.3%, it looks like this party is going to go on in midnight and beyond.
I mean, looks like it. I mean, the point is this. If this has to depend on global cues looking absolutely rock solid, and I think it will, because you don't want a situation where the market here is partying and then, you come back in at night and, Wall Street sells off big time and in the morning you get punched in the face. You don't want that. So what I'm going to do is just put out a couple of points which does not talk to so much what's happening here, because it's very evident. Banks are doing well, IT is doing well, advanced decline is through the roof and it's looking pretty solid. I'm going to tell you that perhaps there is a chance that what we saw last night in the US, which is the S&P 500, there may be more to go. And why am I saying that? Very simple indicator. This is the breadth and momentum indicators. Breadth as measured by stocks over and under the 200-day moving average, and momentum as measured by the relative strength index over 70 and under 30. Both these are converging now on the S&P 500, which means that they are at an extreme, which is number of stocks below, under 30, with stocks RSI under 30, and with the stocks which are trading below the respective 200-day moving averages, also at an extreme. What has happened when this indicator has come through? This has happened 7 times since the year 2000. 6 out of these 7 times, you've had a situation where over the next 3 months, the S&P has rallied about 13%. There was one exception, right? And that exception was 2008, when after hitting this kind of an extreme degree, the market actually sold off more. It fell another 5% before things stabilized. I think we all agree this is not 2008. So can we just hope that things, the global does not throw us a nasty surprise. It stays well behaved and allows this market to do its own thing. So I think we're only looking for the global to not throw us a nasty surprise. Not very much help is needed, but you don't need to wake up to a 2-3% down days like what we had over the last couple of trading sessions. On the Nifty, just 2 things. One, the 23rd of September gap is almost filled. The level to watch is 17,291. And then after that, you basically come back to that old trend line from the all-time high, which comes in at about 17,670. That is still some time away. But with these kind of leaps that we are seeing, it's possible it comes sooner than earlier. Hopefully, at least that's the case.
Well, in terms of the possible handover that we get from Wall Street on Thursday as we open up, the Dow futures is currently up 350 points. That's a gain of about 1.25%. And there's so much talk about a Fed pivot. And in that context, today we had a meeting from Reserve Bank of Australia, and they've raised rates less than what the street was anticipating. A 25 basis points rate hike versus consensus expectations of a 50 basis point rate hike. And this perhaps is the first soft pivot from a major central bank. But our own cues have also been very encouraging. We've got lots of business updates from banks as well as NBFCs, and they're looking fairly solid. The Nifty Bank, as we've been pointing out, has been leading the rally, and that's currently up more than about 2.5%. And in big cues for next week, a whole host of IT earnings, all the large cap ones, Infi, TCS, Wipro, HCL Tech will be reporting numbers next week. And plus, we've got that all-important US CPI on 13th of October. That's what the street will be tracking very closely. But Anuj, what a day, right? At no point of time has this rally faltered, fizzled, just going on from strength to strength.
Oh, yes. And, Prashant would remember this. In the morning, I was saying that, today at least you can stick your neck out and say that the market rally will not be sold into. In fact, today, there are days when you chase the gap up. Today was the day to chase the gap up. After the gap up, if you're bought, you've still added another 150, 200 points, 150 points at least, which is a lot on the Nifty. Now, what we have done is we are now trading above last Monday's high. Why is trading above last Monday's high important? Because if you push a bit more and take it to say 17,327, then the weekly candle, the last week's candle was negative, right? That weekly candle gets nullified if you close above 17,327. Now, so that way it's important. And then, as Prashant said, the trend line that we've been talking ad nauseum. I think the Bank Nifty is the one to watch out for in the next couple of hours because it's still 200 points off its Monday's high, full 200 points, and 200 points is actually nothing for Bank Nifty. It can easily do that. And B, because while IT and banks both have done well, banks are relatively stronger, and today is the Financial Nifty's weekly options expiry. Now, I was looking at the data. There's been some call writing even today on Financial Nifty at 17,800. Now, that's maybe another 150 points or so away. Let's just pull out the chart of Financial Nifty, today's chart. That's, of course, 17,800 call, which is where you have the highest open interest build-up. 17,715 is what we have. 75 points is not a lot on a day when the Financial Nifty is already up 450 points. But the large question again, Rima, comes back to this point. This is a market which on Friday you would have been wondering where did this massive rally come from, right? Monday you had that massive decline. Today you have seen this big rally. So it's just no trend as such. Positional, if you're a positional trader, you're getting whipsawed both ways. So you have to be really nimble about day-to-day moves. Unless, of course, you've taken a call that regardless of volatility, you'll go through this market and, take a positional call. But otherwise, very tough market on a day-to-day basis.
No, absolutely. So it is tough. I mean, you get thrown off and whipsawed either both ways. Nigel, what are you watching out for?
Well, Prashant, I'm just looking at the day, and it's been a bit of a trend day, so to call it. As Anuj said, you bought the Nifty at any point of time, you'll be making good money. And it's been that sort of a day when the Nifty has just been moving higher. I'm looking at a few technical levels. We took out the 100, the 200 DMA rather easily, from the past few trading sessions. Now it appears the bulls, they are eyeing a closer to around, that 50 DMA odd mark. The 50 and the 200 DMA, they're in the vicinity of around 17,450 to around 17,550 odd. The Nifty Bank, that's the star performer today. It's around 750 to around 800 points away from that 200 DMA. From the 20 DMA actually, that's at around 39,800 approximately. So keep an eye out on the Nifty Bank. That needs to close closer, with the gap up that we have seen and the kind of trend that we have seen. And just one more factor, the options data as well is quite encouraging. The PCR, well, it had dipped to around 0.8, 0.9 time odd. Now it's moved to around 1.2, 1.22 odd the last time I checked. The 17,100 put, the 17,200 put, well, both of them are fairly active in today's trading session. So that's giving you some bit of encouragement. Remember a few sessions ago, you had some put writing. So you got some heart from that fact. And maybe the FIs being net short on the index isn't such a bad thing because if we can sustain at these levels, they'll be forced to shut out. But we still got around 55 minutes to go. So back to you all in the studios. I'll keep coming back to you.
All right, and now let's tell our viewers what we've lined up for you on Closing Bell today. It's a very good day of trade with the key indices holding with a 2% gain. Financials outperform, metals lead the charge, while all the sectoral indices are comfortably in the green. We'll talk all things market with Mehraboon Irani and discuss market technicals with Jay Bala of CashTheChaos.com. A slew of business updates from the financial space: IndusInd Bank, HDFC Limited, HDFC Bank, and M&M Financial. Those details also lined up on the show. And big moves seen in Adani Ports. The stock is higher by 5%. What's leading the stock higher? Details coming up later on the show. And we'll also be joined by Vaibhav Sanghvi of Avendus Capital, who will be discussing the road ahead for equities and the key stocks and sectors to track. All this and much more lined up on Closing Bell today.
All right, so that's basically what's lined up here. How should you position yourself in the last hour of trade? Rahul Mohinder of Veratech.com, VeratechIndia.com is with us. Rahul, great to have you with us here on the program. Thank you very much. You don't want to... one hopes the trend, there is a trend, right? Because so far it's been big days, both on the upside and the downside. Do you think we will have a bit of a clean run from here? And what would you want to do?
I think, Prashant, you summed it up very well. I was hearing you earlier where you talked about how, the markets filled that gap which it created last week around that 23rd to 26th of September area. And I think this is what's the key hurdle now. We would definitely aim for a closing past 17,320 or so for getting a full clarity that we're out of the bear grip. So I think to answer you very clearly, what is the trend from a positional trader's point of view? I think he still needs evidence. He still needs to see 17,300, 320, those levels pushed out. But yes, the clues are very, very big with the Dow futures and the NASDAQ futures all up. And I think the way that we've set up in terms of the volume action of today also is heartening when you look at some of the index heavyweights. So I think, I could probably say the cat's out of the bag, that the tendency of that happening or the likelihood of that happening going past 17,320 is very high. So whilst we haven't seen that movement yet, I think I'll lean towards buying. And again, that would lead me into giving you some stock calls just on the heavyweights today. And that's because one sees that clarity in levels. I'll probably start by saying Reliance. 2480 to 2490, that's a target you could be buying Reliance Industries for. I keep a stop loss just below the 2400 mark. Bajaj Finance, another stock where I think we could go as high as 7900. And again, this may take a couple of sessions, but keep a stop loss at 7250. One could go long on the stock. And Kotak Bank, again, an index weight, 1780 being a stop loss. One could be looking at levels of 1885 coming on the stock. So I think all in all, we are, in for a good show. But I'm going to take some caution and say, look, wait for 17,320 for full clarity. And if you're a Nifty Bank, trader, I would say that's probably the more positive index. And once that gets past 39,400, you'd probably see a larger sprint there.
Okay, Rahul, thanks for that. We've got Mehrbun Irani now joining us. Mehrbun, good afternoon. Thanks for joining us. What have you made of today's big rally?
I think we are definitely following the global markets. Anuj, no second thoughts on that. I think you and I and everybody is discussing as to how the futures are behaving right now and possibly taking the next call. Now, what happened yesterday and what happened today, I think nobody would have predicted as to why sudden sharp turnaround. But if you ask me, and I follow the global markets, especially the US markets, quite closely for a long time now, it is definitely oversold. So what we have seen yesterday was a reflection of the fact that the bond market, the bond yields, showed a sign of coming down. And I've always believed over the last 20, 25, 30 years now that I'm in the market, that it's the bond markets which ultimately becomes an indicator as to what equity is going to do. So coming off of the bond yields was a big positive as far as the US markets goes. And I would possibly, if I was ready to bet my money, which I normally don't easily, but I would say that the US markets possibly could surprise a little bit more on the upside, because it's oversold. Coming to the Indian markets, while we will continue to do what the US markets are doing, somewhere I believe that in India, virtually every man on the street and his dog is owning shares in the Indian market. So Indian markets definitely are not under-owned in any way. Everybody is investing money in the Indian markets in some way or the other. So I think Indian markets, as far as the Nifty goes, could struggle a little bit, despite the US markets possibly going up a little bit more. So I am in fact not rolling out the S&P going towards 4,000 levels. Indian markets will remain firm, but it may struggle as far as at the Nifty level, but individual stocks may continue to do well for some more time to come. Whether the markets have made a bottom, certainly from an investment angle, I would not stick my neck out to say that. But from a trading angle, I think because I believe the US markets could rally a little bit more, maybe the next few days, Indian markets also should do well while struggling at the Nifty level.
Okay, all right. Hi, Mehrboon. What are you made of the auto sales numbers? You know, they came in a couple of days ago, I mean, over the past weekend. Some of those stocks did come in for some profit taking. We have Hero MotoCorp, though, that's bounced back today. From the two-wheeler pack in particular, what's looking good according to you?
I would say TVS definitely stands out. Now, the point is the stock also has behaved very well. As far as Hero MotoCorp goes, the bounce which we are seeing today is despite disappointing numbers. Market was not expecting too much from Hero MotoCorp, but the stock relatively is under-owned vis-a-vis the others. So a bounce, honestly, I'm not surprised. In fact, the same logic can apply even to the entire pharma pack or the IT pack. They are going to bounce well because they are under-owned and nobody is discussing them for quite some time right now. Coming back to your auto question, I would say that I would still stick to TVS Motor at number one, while stating that the stock relatively has become a little bit expensive. It's moved up very well. Hero MotoCorp I won't touch, though as a trading bet, it could provide an opportunity.
Mehrboon, do stay on. Let's talk about the banking space. Abhishek is joining in to get us up to speed with the business updates coming through from IndusInd Bank, M&M Financial, HDFC Limited and HDFC Bank. Abhishek, over to you.
Well, Rima, to begin with IndusInd Bank, it looks like they have gained market share and the business momentum is pretty strong. On a sequential basis, the deposit growth is the highest in last 5 quarters and the loan growth is the best in last 4 quarters. So deposits are up 14.65% YOY and about 4.2% sequentially. The loan growth is at 17.6% YOY and about 4.7% sequentially. M&M Finance, they have given asset quality update for the first time in the preview numbers. So over there, the gross NPA ratio has come down to 7% when compared to 8% in the previous quarter. Disbursals momentum has remained strong. So for the month of September, the disbursals were close to 4,100 crores, up more than 9% on a month-on-month basis. The collection efficiency has improved. For the month of September, the collection efficiency was at 98% when compared to 96% in August and 96% that they saw in the month of June. HDFC Limited, the loans assigned is up 28% YOY, but down about 4% sequentially. The dividend income was robust, growing at 98% on a sequential basis, and the individual loans sold to HDFC Bank was strong at 27% YOY and about 6.2% sequentially. HDFC Bank, over there, YOY, the loan growth is robust and at a 14-quarter high. So deposit momentum was strong, growing at 19% YOY and about 4.3% sequentially. The loan growth momentum at 23.5% YOY and about 6.1% sequentially. Even if you remove the pool that is from HDFC Limited, the loan growth momentum has been strong at 23.4% YOY and about 6.2% sequentially. The CD ratio or credit to deposit ratio has improved massively, which may suggest that the net interest margin may remain in the previous quarter level or improve. Back to you.
Abhishek, thank you very much for that. Mehrboon, that's a lot of numbers for investors to pass through. There are so many KPIs when it comes to banking stocks. But amongst the 4 that Abhishek listed out, which one stands out and why?
Well, I've been quite vocal, stating right from the month of January of 2022 that sell IT and buy financials. And in financials, I was quite positive. Apart from the private sector names, I was quite positive on the entire public sector bank space. Let's be honest about the fact that PSU banks, if you allow me to speak for a minute, PSU banks as a complex had become quite attractive. Beaten up, left for the dead, completely ignored. It was a clear contrarian investor's dream. And the NPA pig was passing through the python of Indian banking. And once the provisioning subsides, I think you are seeing the real numbers coming, which the market is now giving a proper thumbs up. As far as the numbers goes, which Abhishek mentioned, I think the banks, including the likes of SBI, HDFC Bank, IndusInd Bank, Yes Bank, even Karur Vysya Federal Bank have reported a double-digit growth in loan growth for the second quarter on a year-on-year basis. Now, this is definitely painting a very rosy picture. The point possibly the only negative as far as financials goes is this entire space has done very, very, very well. But allow me to state that with the festival season coming, better credit utilization driven by MSMEs and strong personal growth. Also, the concentration of few borrowers, if you notice, quite a few banks, including the likes of IndusInd Bank, have brought it down quite substantially. Also, commercial vehicles market has improved. So I think that is also aiding a lot of banks. So I would remain positive on this entire space. And if you ask me to put my choice on the put the order, I would say I would still go with IndusInd Bank. The stock has definitely outperformed on an absolute basis as well as relative basis vis-a-vis the others. I would say IndusInd Bank at number 1, HDFC Bank at number 2. And an outsider in this pack would be something like an IDFC first and maybe a Federal, maybe a Karur Vysya Bank.
Right, Melbourne got that, but let's focus on one of the big gainers on the Nifty. That's Adani Ports. Just still a short while back, it was one of the biggest gainers. So, Melbourne, I'm going to come across to you for your review on the stock. But for the time being, let's hop across. Vivek Iyer is standing by to run us through a quick analysis on that front. Vivek?
Well, absolutely. When you're talking about Adani Ports, yesterday, the entire pack saw quite a bit of a sell-off, and Adani Ports wasn't an exception. In fact, the stock was down almost 4.5% in the session yesterday. Today, it's recouped all of the losses. In fact, trading above yesterday's dip for yesterday's high as well. Now, when you're talking about what exactly has transpired, yesterday the company came out with an operational update, and when you're talking about this particular update, some strong operational performance coming through as far as the month of September is concerned in terms of the volumes handled as far as the ports are concerned. So the company recorded a 13% year-on-year growth as far as the cargo volumes were concerned for September 2022, and the company says that this is in line with the average monthly run rate that they had earlier guided for. They were earlier guiding for 350 to 360 million metric tons. Now, when you're talking about the first 6 months of FY23, the company has managed almost 177 million metric tons of cargo, which is a gain of almost 11% on a year-on-year basis. So now this involves both the East Coast as well as the West Coast. The East Coast volumes were up almost 13%, led by the Krishnapatnam port, the Gangavaram port, as well as the Kattupalli and Ennore port combined. On the other hand, the West Coast volumes, which were up 10%, were aided by Mundra, Dahej, Tuna, as well as the Goa ports.
Okay, all right, Vivek, thanks a lot for that. Melbourne, what's your view on the stock? Adani Ports was moving to around that 1,000 rupee odd mark. Then it's seen quite a sharp correction, actually. Would you look to buy it on this dip, closer to around 800 rupees?
Well, at the outset, I would like to state that this is one of the very few Adani Group stocks which is being covered by research houses. Also, we very well know that if you were owning 4 or 5 or 6 of the Adani Group stocks in your portfolio, you would not even believe that there is a slowdown, there is a recession, because you would have it become much more richer, and that has made the promoter also possibly the second richest person in the world. With full respect to them, I think I would like to state that they are doing a lot of things. Coming to Adani Ports, I would say is the largest commercial private operator, which everybody knows, with over 25% of total cargo movement. They evolved from a single port, and I remember visiting the unit over there maybe 15, 20 years ago. Dealing in one commodity, now it has become an integrated logistics platform. The management has clearly stated that they aim to become India's largest integrated transport utility operator. The higher realizations and bulk volumes is definitely improving them. But Nigel, let's be very honest that the strong organic growth coupled with efficient assimilation of inorganic acquisition which they have been going on making is also helping in improving margins. You mentioned that stock has come off. Yes, the biggest problem is somewhere, I think the stocks had run up a little bit too sharply. 930, 950 becoming an 810, 820, is it a great buy? I would say from an investment angle, certainly yes. But looking at the way the stocks have come off, in the very short run, it's distinctly possible that they may shave off a little bit more percentage points as far as the stock price goes. That will not surprise me. I'm not saying it's going to happen. But if I was an investor wanting to buy into Adani Ports, I think this would be a welcome opportunity for me, a 940, 950 coming off by 15-18%. And an investor should not bother maybe about another 5-7% getting shaved off. So if I believe in the company and the longer term and I want to invest in it, I would certainly use the sharp fall in the share prices of most Adani Group companies. But coming to Adani Ports in particular, I would take it certainly as a decent investment buying opportunity.
All right, Maribon, we'll leave it there. Thank you very much for your time. Great speaking with you, as always, here on the program. Well, 370 odd points. I mean, there is absolutely no let up whatsoever. We're at 17,260. And that gap that I was talking about is about 30 points away. The 23rd of September gap when the market kind of collapsed. So just 30 points more and that's done. And then you look higher. By the way, futures are all higher, very strongly as well. So you look at the US, the NASDAQ futures are up about 1.6%. The S&P 500 futures are up 1.3%. So, you've got NI there, I'm assuming. And of course, you look at what's happening in Europe as well. Very strong bounce backs. On an average 2.5% gain on European equity indices, if not more. But that's also a bunch which is, of course, done most badly after US. Well, we'll take a quick break here. Jai Bala is going to be with us of Cash the Chaos on the other side. Technicals in focus, levels in focus with Jai in just a bit. We'll also have Vaibhav Sanghvi of Avendus Capital to take us through the way forward in markets. That's also a conversation you don't want to miss coming up on the other side.
Welcome back. Let's now move on to a special segment that we have for you on Closing Bell, shifting focus to the macros. The RBI on Friday hiked rates by 50 basis points, but they retained their stance at withdrawal or for accommodation. Where are interest rates headed and has the rupee bottomed out? CNBC-TV18 polled a whole host of debt fund managers and economists. Prashant has collated that data and he's joining in with the CNBC-TV18 Economy Centimeter.
Well, the big question, which is very relevant here in India and globally as well, is where will central bank policy rates, I mean RBI in our case, and globally, where will they settle at? How high is high enough? We conducted a poll of debt fund managers and experts which threw up some interesting insights. Well, first, the question that we asked them was, where do they see repo rate settling by December? Almost 94% of them expect the Reserve Bank of India to hike the repo rate in its next policy meeting in December. Also, over 80% now expect a hike of between 35 to 50 basis points. Most of them also see repo rate peaking at between 6.25 to 6.5%. 50% of the respondents see the repo rate peaking by March of 2023. Next, about 69% see the RBI changing its stance to neutral in February next year. Interestingly, most experts don't see the 10-year government securities yield rising beyond 7.5%, which should come as a relief to equity fund managers as well. I mean, the yield which is polled is not much higher than where we are right now. Even on the currency, the rupee, the dollar rupee, despite the recent scare, a majority don't see it going past 83 to a dollar, not much by way of depreciation from here. Despite the relative stability that we've seen here in India amidst the global turmoil, market participants do tell us, though, that they will continue to closely watch geopolitics, global sticky inflation, and God forbid a financial accident, which, if it were to come to pass, could throw things into disarray.
Okay, very interesting. Prashant, thank you very much for that. Markets nudging higher and higher. It's now a 1250-point rally on the Sensex. The Nifty is surged well above 17,250. All the Nifty indices are currently in the green, with metals leading the charge. Jai Bala of cashthechaos.com joins us on the show now. Jai, afternoon. Thanks so much for that. What have you made of this kind of an up move that we're seeing today, and where are we headed?
Thanks for having me on the show, Rima. See, the markets are doing pretty much as expected. The zone closer to 17,300 is an ideal pullback zone, and the market remains on sell on rise mode, in my opinion. As long as the market remains below 17,550, the resistance, the markets are not going higher, and this is probably an opportunity to sell. So watch out for it. The Nifty Bank also doing pretty similar structure. If you look at key stocks like State Bank of India, or Hdfc Bank, they have all come below important support levels. SBI shouldn't have come below 530. Hdfc Bank shouldn't have come below 1410, and they've both done that. So, it's not looking positive at the moment. So I would still believe this market could be possible that even today's high could be a turning point, given the fact that we have a holiday tomorrow.
Jay, if the US market were to give a meaningful bounce, isn't it possible this stretches on for a bit longer? So you should be mindful of that.
They better give a meaningful bounce here, Prashant. If they don't give a meaningful bounce here, the markets breaking below October low provides the setup for an accelerated decline for the US markets. Now, looking at the structure from the August highs, the structure up to the low of 35.64, the futures low that it made in October, it's incomplete. We definitely have further lower lows coming for the US markets. But nothing is definite in the markets, but it's very close to definite. The structure is very negative there, but the relief rally is a pause to refresh to sell.
Okay, all right. Hi, Jay. Afternoon. What about the couple of these defensive names? The IT index, well, today is seeing a bit of a bounce. So where does support lie on the IT index? And the pharma index, after many, many years, it's showing some traction. If you look at it the last 7 years or so, you've not got much returns. But now it's been a relative outperformer, particularly in the last 45 days. View on that index?
That's right. See, let's take the pharma first. I posted 2 Fridays ago that the pharma index is looking like a play on a sizable relief rally, and that's happening. It took out the important resistance at 12,900. It has potential to rally up to somewhere close to 13,900 to 14,400. Even we discussed last week that about relative strength in Cipla and trading bounds in Dr. Lal patent. Those all played out, and even now there are some trading opportunities in the pharma sector, but choose very wisely. Some of them have rallied quite well. When it comes to IT, the decline from the August highs to a slightly below the July low has come in 3 steps. So, if the IT index were to rally from here, that won't be a good sign. In fact, if it clocks a lower low one more time and then holds support about 25,000 mark, roughly about 25,000 on the Nifty IT index, that will be a positive for the medium term. So the short-term supports are at about 27,100. The medium-term supports are about 25,100. So, if it were to go down one more time, to these levels and holds, that will be a positive for IT index. I've been anticipating a medium-term reversal for the IT index, but it's still just doing some kind of a basing pattern. It's still not reversed.
Jay, talking about the other macros, there is this big OPEC meeting and the rumors are they're mulling a production cut. And that's the reason why we saw the near 5% rally in crude prices overnight. Brent crude continues to hover around that $89 per barrel mark. What's the chart telling you?
Yeah, the Brent and NYMEX, both varieties are slightly oversold in the short term. While the medium-term trend is firmly down, the short term could hold an opportunity for a bounce for Brent to somewhere close to about 103 and 99 for the light variety. So as long as the index stays above the commodity stays above 82.44, I think there is a relief rally playing out somewhere close to 99 to 103.
Any specific trades, Jay, that you'd want viewers to take? Anything looking particularly compelling?
Yeah, I have, surprisingly, I have 2-3 long ideas. So I would put this in front, allocate somewhere close 25 to 50% of your normal allocation, and then play these ideas. I have one from the healthcare space. One is Eris Life Sciences. It's looking pretty attractive. It's breaking out of an inverse head and shoulder pattern. And from the 2020 lows, it's trending quite strongly. So it's a stock in an uptrend. Place a stop below 670 and expect fresh 52-week highs close to 890, probably even 900. But allocation is somewhere close to 50% of your normal allocation. The second is a long on Coal India. Probably there's some energy play out here. A stop below 207 with a price objective of 259. Once again, allocate much lower than your usual allocation. I also like Cummins India at current levels, but the risk reward is just 1:1. So so that's the reason why I'm just not putting it out as a full trade, but just be aware there is a positive scalping trade out there.
Okay, all right, Jay. Thanks so much for stopping by and filling us in with your calls on the whole host of indices actually we discussed, and a couple of those picks, Coal India and Eris Life Sciences. We've taken note of both of that. Well, let's move on then. We have Vaibhav Sanghvi, the co-CEO, United Vendis Capital Alternate Strategies, who joins us. Hi, Vaibhav. Thanks so much for joining in. Vaibhav, the last time we chatted, I recall you saying that the Nifty has got the momentum. Though at those levels, at around the 17,700 odd, we're saying you're a little bit cautious because the run-up was too steep. We did correct close to around 900 points odd. At what level would you turn constructive on the Nifty itself? What are the levels you're looking at basically on the Nifty? Do you think we can, see a correction from here, or do you think we're trending higher? Fresh all-time highs are in the offing.
Sure. So, hi, Nigel. I think the view which we have currently is basically that, yes, of course, we are seeing that correction kind of happen from about 17,700 or 800 levels. What we need to, keep an extra focus on is basically the events rather than the levels. Why I'm saying this is basically that in this quarterly earnings, when it comes about, especially in the US and in the other parts of the globe, we will see that the corporates kind of try and reduce their guidance. At the same time, analyst forecast also will be kind of trimmed down, purely because to take into construct that the global growth is kind of likely to slip down at a much faster pace. Now, when that kind of happens, you may see further round of probably profit booking on the global side. So in that terms, probably at least for the next 2 months is where we do think that the volatility will continue, right? And of course, the rapid pace of your interest rates increase will always be prone to some or other accidents, which may probably happen in the global scheme of things. So we need to be aware of those kind of risk factors. Not saying that the domestic quarterly earnings are going to be bad. I think domestic quarterly earnings are going to be pretty good. But from a global perspective, we may continue to see that risk of flows kind of starting to happen once this upward correction kind of gets over.
Well, talking about the domestic earnings calendar, it's going to be all about IT next week when heavyweights like TCS, Infi, HCL Tech, Wipro and midcaps like Mindtree and Cyient report their numbers next week. I think we could just pull up that calendar, the IT earnings calendar, and then you will get the names and the dates along with it. But what are we going to watch beyond the numbers? One, up until now, the management commentary has been fairly positive. But since then, the macros in US and Europe have started to deteriorate. So will the positive management commentary hold even as the macros continue to deteriorate? And globally, clients have turned fairly cautious. So annual budgets for this year have remained intact. But what about for next year? Is there a risk that calendar year 2023, client budgets are cut, tech budgets have been brought down? That's a fear that the market has. Also, so far, the only two verticals which the companies have called out as red flags, one is mortgage business in the US due to rising interest rates, and the other one is retail, which has been hit by inflation. But are there any other verticals where we are seeing some signs of slowdown or weakness? UK and Europe roughly contributes about 25 to 30% of IT, large cap IT companies' earnings and revenues. Is there a risk of slowdown over there? Developments like Credit Suisse and what is happening impacts the BFSI sector. So the commentary on BFSI is going to be watched very crucial. The street was banking on price increases, but now that clients are getting hit due to inflation and slowing demand, are they going to push back against a possible price increase? Are they going to resist a price increase that IT companies want to take? And finally, as the pressures on profitability continue to remain elevated or even mount, will the IT companies resort to deferring the fresher hiring? And there are a lot of reports that IT companies are slowing down on their fresher hiring. Despite giving an offer letter to employees, they're not upholding it. There is talk about how variable pay has also been cut. So the street is going to be watching the commentary on the supply side very closely, apart from, of course, the attrition number. But Vaibhav, you wanted? Yeah.
No. I mean, I think Nimesh is also with us. So I think we'll just go to Vaibhav and just debate Vaibhav on IT. And Rima, of course, is going to be living in office starting 10th, right, Rima? Yes. 9th to 10th for 20 days from the 10th. But Nimesh is standing by as always with what he's picking up from dealing rooms, and this is D Street Chatter as always. Nimesh, hi, over to you.
Hi Prashant. So a sharp pullback for Indian equities and largely on back of global risk on, so that's helping the Indian markets as well. And the heavy lifting today is largely done by the financial stocks. So the bank Nifty Bank is up almost 3%. And it's not only a short covering rally, but there is a bit of genuine buying as well, is what I understand, in the financial sector stocks today. So that's clearly playing out in the financial names. Of course, it's a weekly expiry as well, so that's also playing out in the Nifty Bank. While the flows are still muted, that was the case yesterday as well. Even today, the flows are slightly muted because there is a bit of truncated bit across Asia, and that's the case going to be in India as well. But for a change today, there is a bit of buying as well. So not only it's a short covering in the financial names, but outside financials as well. I believe there is a bit of buying back, not only from the FIs but from the domestic funds as well. Having said that, we are pretty much now close to the upper end of the Nifty range between 16,800 to 17,300. I guess above 17,300, you'll probably see further short covering rally in the Indian market. So that's something to watch out for. But clearly, from a flow point of view, there is leadership now from back in the financials, and a bit of buying as well from the larger FIs.
All right, Nimesh, that's about dealing room check. But what about individual stocks? What are you picking up?
Hi, Nigel. So in terms of individual names, the first stock is United Spirits. As I said, there is buying interest back outside of financials as well, and United Spirits stands out purely on back of strong buy flow. So that's one stock which is buzzing on large volumes, on some bit of interest back at the FI desk. So that's the first one. The second stock is Bajaj Finance. Again, it's part of my charter list. That's one stock which is consistently seeing good amount of buying traction from the larger FIs. Most likely, the quarterly update will come today evening, so that's expected to be quite strong for Bajaj Finance in Q2, and hence a bit of move in that stock. So the second one. The third stock is Fortis Healthcare. After a long time, ever since the disappointment from the Supreme Court hearing, for the first time, I'm getting a sense that maybe at these levels, some bit of interest is back. So some large funds are looking to bid for Fortis Healthcare at few FI desks. So that's a bit of interest back in Fortis Healthcare. And the last stock is Godrej Properties. That's one stock which has relatively underperformed the real estate pack. Seems like some bit of interest is back, not only from the larger HNIs, but for if you look at the disclosure data for the last couple of days, Godrej property promoters have started buying at these levels. So maybe that's the reason why some bit of interest is back within the HNI community. So even Godrej Properties is well bid by the larger HNIs today, and hence a bit of up move in that stock as well.
All right, Nimesh, thank you very much for that. That's what Nimesh is picking up from his conversations out there. Interesting list as always. Weber, of course, is still with us. Weber, thanks for waiting. Rima outlined that picture on IT services. Are you inclined to dip your feet there? Do you already own names, or will you want to?
I think, Prashant, we've spoken about this last time in the sense that, when in an environment where the global growth is kind of getting downgraded in terms of the forecast, and global companies are on the path to kind of, better the profitability by cutting costs. In that environment, when there is a potential curtailing of the discretionary spend on IT, your revenue is going to be or likely to be under a good amount of pressure going forward, at least for a 1 year perspective. Now, we've already seen that the margins are kind of weakish, and probably going forward as well as kind of price negotiations come into effect, you might continue to see some amount of pressures there as well. So at this point in time, while it is corrected from the highs, we are still not very, very constructive at these levels. Of course, rupee is a tailwind, but on a cross-currency basis, you may have some headwinds from the euro side as well. So it's pretty complicated. We'll wait for the commentary to come about, especially on the quarterly numbers, which we expect that there would be some amount of toning down, especially on the revenue side.
Weber, thank you very much for joining in, and have a good holiday tomorrow. Season's greetings to you. On the subject of Godrej Property, just take a look at the Mumbai registrations, right? Despite Shraddh period falling in the month of September, despite rising mortgage rates, on a month-on-month basis, the Mumbai registrations went up by another 1%, right? So it continues to remain rock solid, and the month of September is the best September in more than a decade. So they're just...
This is month
on month. I'm saying month on month, despite mortgages, continuing to go up, despite the Shraddh season, despite monsoon, on a month-on-month basis, registrations for Mumbai real estate continue to remain at very elevated levels, and they continue to rise. So that bodes well for names like Godrej Properties, something that Nimesh was earlier talking about, where HNIs too have been lapping up the stocks, but even others like Macrotech Developers, Oberoi Realty, Suntech Realty, these are some of the listed Mumbai real estate players. Get into a break. On the other side, we'll get you a check on, more on the markets, and we'll also tell you what to buy today and sell tomorrow.
Well, no let up as we speak. The Nifty, the Sensex, the Nifty Bank, they're doing well, but the breadth of the market is very positive. You have close to around 5 stocks that are advancing. For just one stock that's, that's declining. So that's pretty good. That's telling you the breadth of the market is good. A few gainers at this point of time. At around 3 p.m., you had a couple of stocks that moved quite well. From the F&O list, you had Z Entertainment, India Bulls Housing Finance, and Aarti Industries. All these three, they perked up in the last 30 minutes and moving with good volumes. Well, and from the cash market stocks as well, you have stocks like NLC, you have KCP, and Apar Industries. If you look at the intraday chart on all these stocks, all of them, they are spiking up. Volumes as well did build up in the last 1 hour. So just thought we'll highlight some of those top buzzing stocks at around 3:10 p.m. odd. But let's go back to Rahul Mohindar. Well, Rahul, if you're a bull, you'll be very, very happy. On a closing basis as well, we're closing closer to around that 17,300 mark. What do you make of today's trading session? What are the levels you're looking at on the downside? And run us through your picks as well.
Well, absolutely. One couldn't ask for more on the close, but you know, if I had to push the envelope, we'd all like to see 17,300 crossed. I mean, who knows? You never know what the last 10 or 12 minutes have in store for us. But I think in the main, I think we've seen most of the index heavyweights give us, you know, good inputs in terms of a forthcoming breakout. Whether this is a breakout, which is a short-term rally or a medium-term up move, I think that will need to be assessed. And I think time will tell. We've got the market holiday tomorrow, so it's really not a BTST. So one will have to take a slightly more positional stance on the picks that I'm just rolling out with. The first one being Tata Motors. The stock's consolidated very well over the last couple of sessions. 407, the current price, is a decent buy point, I think. We should move to about 433, keep a stop loss of 398 when going long. Hdfc Bank at the present level of 1452 can also be bought into, keep a stop loss at the 1425 mark. I think we are heading to about 1505 levels. So both of these stocks have to be bought with a slightly short-term positional stance.
All right. Rahul, thanks very much for that, for coming back with those specific trading ideas. Hemang Jani is now with us. He's retail equity strategist with Motilal Oswal Financial Services. Hemang, good to have you with us here. Which is the best setup bank or financial name according to you from a positional standpoint?
Good afternoon, Prashant. I think you know, banking and financial services is the you know, vertical where we are extremely positive, both in terms of the current developments, you know, where the interest rates are moving up, and also from a Q2 earning perspective. I think most of the private sector banks we think should report you know, good numbers. The business updates which have come in have been quite good. If you look at IndusInd Bank, the overall outlook in terms of growth is pretty good. So we think that you know, from a large private sector banks, ICICI Bank, State Bank, and from the mid-sized banks, IndusInd Bank, these are the, you know, names where we will have a positive bias when it comes to the BFSI space.
Hemang, afternoon. What about Marico? They're guiding for a low single-digit volume growth for the India business. They're still talking about rural distress. Is there any read-through for the rest of the FMCG pack?
So, Rima, when we look at Marico, we have to reckon that, you know, the palm oil price, you know, cool-off that we have seen, they do not benefit in any manner over there. Also, if you look at the presence of Marico, they are more urban-focused company. They don't have very significant presence on the rural side. So we think that, you know, maybe names like HUL or GCPL will have both the benefits of the lower palm oil price and the cool off in the raw material prices, as well as a slightly better distribution network. So we think that, you know, HUL and GCPL will report a relatively better set of numbers versus Marico.
All right. Hi, Hemang. Nigel on this side. What about Mazagon Dock? Do you have any view on this stock? You know, as we speak in the last few minutes, there's a big volume uptake and the stock is flying away as well. Any take on that one?
Nigel, we don't cover this company Mazagon, and we think that you know, within defense, both BEL and HL are the names where, you know, we have a positive bias. BEL is something that we cover, and given the kind of you know, traction that we have seen in the defense stocks, I think this is one to really watch out for with the kind of order inflows and you know, overall earning picture that we are looking at.
Okay, you know what we'll do is we'll take a quick commercial break here. It's what, 300 and 90 points, which means that even as we approach closing with about 8 minutes to go, there is no letting up. We're at the day's high, and this is super, super strong. 285, 17,285 is the high, and we're at 17,278. So not even 10 points from the day's high as we approach closing. So you're going in with full optimism, with, of course, a break in between. That is tomorrow, which is a market holiday. Hemang is with us, and we'll, of course, wrap things up when we return on the other side. Stay with us.
Electronics Mart India Limited, one of the fastest growing consumer durable and electronics retailers in India, launches an initial public offer of equity shares of rupees 10 each. The 100% book build issue is being offered in the price band of rupees 56 to rupees 59 per equity share. Bid issue opens on Tuesday, October 4th, 2022 and closes on Friday, October 7th, 2022. For risk factors and more details, refer to the RHP available on the website of SEBI, the book running lead managers and the stock exchanges.
This festival, bring in Nissan Magnite. Big on dreams. Bold in passion. Beautiful in every drive. Rush to the nearest Nissan dealership now.
Why invest in just one when you can invest in all? Presenting ICICI Prudential Nifty Auto Index Fund, a scheme that is designed to capture the growth of the automobile segment during this festive season. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Happiness is getting home solid wood furniture this Diwali from insaraf.com, India's #1 solid wood furniture store.
कभी दीवार पर निखर आती है सपनों की सौगात और कभी बेडरूम के कोने में ही हो जाती है नए बिजनेस की शुरुआत। कभी किचन से आती खुशबू से ही भर जाता है पेट और दिल और कभी दरवाजे से आती दिखती है ढेर सारी खुशियां। आपका घर है आपकी अमानत और आपके घर की खुशियां हम रखेंगे सलामत। SBI Home Loans.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Okay, welcome back. I mean, just a super strong day. Look at something like this is, we don't see it with this kind of a move. That's why I'm pointing it out. Look at a stock called Max Ventures. Max Estates is, of course, what they are going to be known now. It's a residential real estate company based out of NCR. It's a limit up 20% higher at about 173. Doesn't trade too much, but today volumes are very strong, and that's the reason why I'm kind of mentioning that particular name. What else are you, Hemang, sort of pushing to your clients at Motilal? Interesting ideas, new ideas?
So in terms of new ideas, Prashant, we have come out with initiating coverage on Mahindra Life Developers. This is a company that is not so much known, though it belongs to Mahindra Group, and they have a presence in Mumbai, Pune, and expanding their footprint to Bangalore. Now, with the kind of new management team and the fact that you will also have some sort of a monetization come through from the IC and IC segment, this is looking very interesting for an 18% kind of a move. And apart from that, we think that the entire discretionary, consumption space, particularly footwear, is something that we've been liking. We did new initiating coverage reports on metro brands and campus, and we think that this quarter should be, good and should reinforce the overall conviction that we have on that space.
Hemang, we'll leave it there. Thank you very much for your time. Appreciate you joining in with that perspective. So that's Hemang Jani with thoughts on the market. Almost a 400-point day is how things are going to leave off today. 17,281, and this is as strong as they come. You'll have to go back, I guess, a few you don't have to go back too much because we've had these wild moves on occasion. But this does stand out. 2.33% higher, matches sort of, step for step what happened overnight in the US. Let me just quickly tell you just a bunch of names from the large cap space which really stood out. So IndusInd Bank right at the top of the list, 6% gains. Adani Ports with a 5% pop. Bajaj Finance with about a 4.33% gain. Coal India, UPL and TCS were out-and-out gainers. Sectorally, it's banks and IT. Throw in the metals there, all 3% moves on those sectoral indices. Rima.
Well, very quickly, Angel One, M&M Financial, those business updates look very good and stocks go home with a double-digit rally. Ease My Trip, where there is news for bonus as well as stock split, the stock gain close to about 6.5% in trade. And a couple of the others, like CSB Bank continues with its gains from yesterday. Bank of Maharashtra's also business update look very strong. On the losing side, KEC was under pressure, down 1.5% despite winning orders for the month of September. Marico was under pressure as the street is a bit disappointed by the low single-digit volume growth guidance that the company has given. And Mazgao Dock, that's one of the stocks. Fresh 52-week high on that. Very strong volume, stock gaining close to about 10%. And Max Ventures, the NCR-based real estate companies, locked in an upper circuit. Nigel?
Well, there were a few more gainers as well in today's trading session. You had Apar Industries. The stock was up close to around 10% in trade today. Couple of other big names as well. PowerMech. Remember, the management has joined us. They're sounding very optimistic about the future. In the last 2 months or so, the stock has moved briskly from around 1,100 to around 2,000, closer to 2,000. PowerMech is the stock that we're talking about. So flying away in trade today. And throw in there a couple of smaller names as well that normally we don't talk about. Gayatri Projects was up and about, but that's only a single-digit stock right now. MM Financial, well, that one as well did pretty well. So to wind things down, it was a solid trading session with the Nifty starting off in the green and building on the gains all through the trading session. The Nifty Bank, the one that saw a sharper pullback, well, that's the one that pulled back in style today, was up close to 1,100 points by the time we wound up. And the breadth of the market firmly in favor of the number of stocks that are advancing. You had close to around 2,300 stocks that were advancing in trade today, while you had only around 530 odd stocks that were on the declining end of things. Metals as well as IT, both global facing in nature, they bounced back in style today. But the banking names, that's the big weight in there. That gained, and that's what gave the Nifty some kind of basis. Good trading session. We have a midweek holiday tomorrow, so wishing you all a happy Dussehra. For the time being, though, we'll wrap up on this edition of Closing Bell. Lots lined up on our Tuesday special offering. Commodity champions lined up on the other side.